Hi friends, let's take a look at Ethereum versus the ETHUSD and Ethereum versus the BTC in today's video. That's right, Ethereum versus ETHUSD. ETHUSD is the national currency of America, and or the USA. As it's more commonly known. So in USA they use ETHUSD, and this is Ethereum versus ETHUSD. And what have we got on the go? Well, actually, I think we've done all right in terms of charting this out yesterday. There was this wedge on the go, and what's happened from this wedge is that it's come up here and it's not managed to achieve, enough to consider it to still have been like to make it so that it wouldn't just turn into a channel. So what we talk about so often on this YouTube channel is how movements outside of this, you can see how these two lines become parallel. In fact, instead of doing that, let me just do it this other way instead so that you get the point a little bit pointier by taking I'll clone this line here, move it on up, move it on up. And you can see there that if I change the color of it, maybe change the color, make it white, so you can see what I'm talking about a bit easier. Make this one white as well. That is now just a channel. Okay, so we talked about all this, how this could happen. We've come back down towards this rusty line. This is where we really need to see the prices being supported at 391, of course, being or 390 or any of this sort of territory. If you jump over to this one, you can see that there's this line here. That's the 236 Fibonacci retracement. If I go all the way over to the left, go up towards the 24-hour time frame, so you can actually see it. What I'm talking about. That's the 236 in there. Go over to the right. And there we are, just actually currently below that line. So let's go back down towards the lower time frames and zoom on in, and you can see that the prices are actually below the 236 currently, and they're right on the median line of this thing in the background, and that's a pitchfork. And if we were to go below that level, then we've got the targets that we've already outlined down below, for instance, coming in various points of inflection along the way, of course. So I'd look out for them, as we always do, as I tell you on the channel. And nothing particularly has changed since yesterday's video. Look at this pattern that we had on there, this triangle type thing, how we broke down below it. Of course, we got measured moves off the back of it. We came right down to this green line. Look, we've nailed it time and time again. We've nailed it so much recently that you really ought to subscribe. Let me know in the comments down below what you think of it. Actually, I'm not even going to bother talking anymore about Ethereum. I've taught you so much in recent past. This is not resentful. I've taught you so much in the recent past that you should be able to kind of make assessments off the back of where we are now yourself. So I'm actually going to just leave it with you. Okay, I'm going to leave it with you for today instead of putting money into your trading account every single day by telling you almost exactly what to look at. Just leave that with you instead, and just kind of, just leave it with you. Leave it with you. Let's go and do a little bit of a look at Ethereum versus Bitcoin. Great. So Bitcoin pairing on the Ethereum one instead, right? So this is what we're looking at. You've got 1, 2, 3, 4 instances of what? Now, I'll just make it easier for you because this is how high the RSI came before it once. This is how high the Stochastics came. This is how high the DMI came with its negative, right? But then if you're looking down here towards the DM positive line, this is how high it got. And we're talking about an upward move here. So looking at the DM positive line, and then subsequently it came up much higher. Okay, the DMI is a much more complicated indicator. And then here on the MACD, so the MACD histogram here, that's the previous high, and this is this high, and this is higher than this one. Well, this is the high over here on the price action, and it is indeed higher than this most recent of highs. So what is that? Correct, that is hidden bearish divergence. So we have some hidden bearish divergence in the go. That's continuation divergence as part of what has now become, which was previously obviously a wedge, has now become a parallel channel towards the downside, just like we spoke about on the USD pricing over there, making it quite easy for us to make a couple of little sort of zonal areas for us to look to. Let me just borrow that line because it doesn't need to be there. And stick one there, clone it, and stick it down below and say, look, movements beyond either of these two areas are going to obviously be significant for us, because, if this were to actually, be hidden bearish divergence and us to continue towards the downside, that would look quite mean if we were to go back down lower than our previous low, confirming this as being a local high and confirming that as being bearish divergence, hidden bearish divergence, continuation divergence. And if we move beyond this area towards the top side, then of course maybe this is just it's actually, you know, a failure swing style pattern where we see that the prices have broken up past their previous resistance points. So there's always two perspectives on these things. Let me just get the little brush out for this part. Just here, you know, moving above there, moving above there, moving above there, and moving above there on these things means that, you know, conditions have changed somewhat. Now, what are the conditions changing from? They're changing from this, which was a bullishly divergent downward trend, you know, as part of a wedge to then become a channel. So that's a change in the conditions right there. And you can see how that all ties together as well. Okay, so you've got all that in your back pocket now, knowing as well that there's this magnolia line just below this purple line. That would obviously, if the prices came down here and found support, it would be significant for one reason. And if they went on beyond it, it'd be significant for another. Just looking at this price action, I'm going to give you a second to guess what that would be. Okay, so here's the top of that. Here's the top. This blue line here is correspondent with this yellow line here, and this magnolia colored line. As part of a Fibonacci retracement. So let me just give you a second. I know that most people know, I don't mean to be inane here, you know, but of course that means that is of course a 236, as you can see right there. So moving down below the 236, you could say validates this from what I talk about in terms of Fibonacci retracements, right? So, okay, so this is your top, then you have your first area of retracement, and when you go beyond that, then that is of course is going to be a significant percentage pull down in the price. And let me just get out a ruler and measure it for you so that you can see and look at that. It is a solid 13%, 14% move down in prices. That would be obviously quite a decent move to have just profited off of in terms of if you shorted the high. But if you're looking for this to come in here and say, okay, where market's changing from a sort of slightly more macro perspective, this is the 4-hour time frame. We're not talking macro here, not talking macaroni cheese. You know, we're talking less, but then you'd be looking down towards these three potential targets down below. Now this is going to be the 382 where this green line is, and that comes in at 0.0297 the 50% area, where it's at 0.02736, and this golden pocket here in there at 0.02483 down to 0.02432. Okie dokie, those would be your targets towards the downside. One, two, and what would you have then if this were to push up a little bit higher? Oh, actually, no, if this were to just be here and not push up any higher, or indeed if it did push up a little bit higher, but you know, no higher than the top end of that Fibonacci retracement, which is obviously denotes the previous high. So in this zone here, but actually specifically just where we've already come to, really just in terms of, first off, what would you be looking at? If that was your top, then that was your top, and then that was your top, and you had a line here of significance which has confluence with another thing. What would that be? What could that be? Here's another thing for you. You've got the volume overall diminishing throughout this period here. Of course, the volume did increase compared to the lows at this high at the head, as you would expect, you know, quite often. But generally speaking, you can see that there's a downward movement here on this volume. So what would you call that? We call it head and shoulders. Just take a trend line to use as a measuring stick. Doesn't need to be super scientific about this thing, but where does that take you to? And that takes you down to the 50% area. Of course, the Dow Jones typical retrace area. If you were to retrace and then continue with a trend towards the top side, that comes in there at 0.02736. And then if you were to go beyond or less or whatever, then you're looking at these other two targets. Okay, so that really spells it out for you. Does it not spell it out for you? Now, if we do beyond this area, then that would be a failed head and shoulders. These things fail more often than they don't. But of course, the price action in the run up to this has got that hidden bearish divergence on the go just between these last two highs. And maybe we give this a shot and we come down here. That would open up a decent enough, easy to manage risk area for either longs or shorts. You trade this in whatever way you want to yourself. But that spells it out far more than I think I am even comfortable doing. Tomorrow I'll probably retrace back into how I normally present episodes with far less of this sort of like, that's how you trade. But I thought, why not? Let's just stick it out there for people today, looking at the Bitcoin thing pairing. Actually, let me know in the comments down below what you think would be happening with the dynamics and the pricing with this thing if that were to occur. Is this going to happen because the Bitcoin prices go through the roof and this Ethereum ones remain relatively stable? Therefore, on the Ethereum to Bitcoin pairing, we see something like that play out while the sort of the dollar pairing stays in or around about the area of its own 236 that we're looking at, where it's actually below currently. Is that what's going to happen? Or something else? And there are other things to look to as well. Of course, we have this smaller, not on this chart. That's the 395. That 236 there. Where is it? We have this one here coming in at 361. And the three targets off the back of that are 361, 309. 309, 267, 225 down to 213 on that one as well. And we have this pitchfork and various other things. Check out all the previous episodes. They're awesome. They're awesome. They're awesome. Awesome. Really awesome. If you get value from these episodes, which you should, honestly, and if you don't get value from them, tell me how you don't. Tell me how you don't. If I make these videos from the perspective of what I would have liked to have seen when I started trading myself, this would have made me a wealthy man. I would like you to know. I would like to know what you think is what the value is missing in this. Is it there's a lack of hype? Is that the problem? Because you're not really going to get that on this channel. Is it a lack of FOMO? Is that the problem? You're not going to get that on this channel. Is it a lack of fear? You're not going to get fear on this channel. Is it a lack of greed? You're not going to get that. But if it's something else, which I could possibly deliver for you, let me know and I'll do that. Otherwise, best YouTube technical analysis out there. No reason not to hit that subscribe button and help the channel grow. I'd really appreciate it. Take time out of my day to do these things for people. I'll catch you next time.